Hello, real estate investors. Today, I'm excited to talk to Adam Demuyakor. He's someone who's as fascinated by real estate as I am, which I always love. He started his career at Morgan Stanley in real estate, private equity, and banking groups. And when he was there, he covered a lot of the largest REITs, real estate companies in the industry, all the kinds of things that we follow. He then worked as an investor focusing on credit and market strategies at the Carlyle Group, and then in a long and short hedge fund, Emerging Sovereign Group, before he started Wilshire Lane Capital, which is a venture capital group that focuses on my favorite subject, real estate technology. Hi, Adam. How are you today?
Hey, Deidre. I'm doing well. How about yourself? It's great to be here.
Well, you got started covering REITs, so I've got to know, was there any REIT that really caught your eye in the beginning and sort of led you into a greater interest in real estate?
Yeah, two REITs that I've liked for a while. One is Prologis, which I used to cover back in my time at Morgan Stanley and just continues to do well. Obviously, e-commerce is an explosive category, and you can see it in the stock over the course of the year. And then another REIT that I like is also Air Communities, which is formerly from Aimco. And, following the pandemic, I think people thought that cities like New York and LA, that people were going to leave and move into the countryside. But I think you're seeing that that's not necessarily the case. And that stock is also doing very well. So those are two names that I'm actually partial to.
I love that. I feel like one of the things that I talk to with beginning investors is that studying REITs is a great way to start learning the fundamentals of real estate, whether or not you want to be an active investor or passive investor. It's a great way to be able to look at something that is, publicly available and see how things play out. What did studying REITs teach you about real estate in general?
Yeah, I think learning REITs during my time at Morgan Stanley really taught me the fundamentals of real estate valuation and really what's important when it comes to running a real estate firm, right? So you're breaking it down at a very simple level. It all comes down to net operating income, which obviously is multiplied via its cap rate. And that gives you the asset level valuation. When you do it over and over and over, you get a portfolio level valuation. And so really just focusing the components of real estate valuation come down to two things, just like all companies, which is maximizing revenues and then minimizing costs. But I think in real estate, it's unique in that it's at the asset level. And so, at Wilshire Lane Capital, that's simply what we're focused on when it comes to our real estate partners that we're fortunate enough to work with. We are simply looking for technology solutions that can help either augment revenue for these real estate firms or help them reduce their costs vis-a-vis technology.
Interesting. So you went back to school to get an MBA from Harvard after you were at Morgan Stanley. Why did you feel like you needed that additional training, or what did it bring you?
Yeah, so working on Wall Street, both at Morgan Stanley and at the Carlyle Group, I got to learn the fundamentals of finance as well as investment and valuation. But I wasn't necessarily trained on a lot of the soft skills, right? On how to run an organization, how to hire people, how to motivate people, how to set incentive structures. And that's a lot of what I learned at Morgan Stanley, which is really how to lead a group and run an organization, and also be able to identify the things that you do like and don't like when it comes to other organizations. And I think that's fundamentally important today because I'm in the business in venture capital, investing in early stage startups. And so I need to be able to identify if there are any structural organizational flaws, to be able to identify those, and also trying to inject our DNA into those companies and try and give them best practices as well.
Fascinating. So you worked at Fifth Wall, which is becoming this monster in real estate venture capital. It's kind of the growth of that has been fascinating to watch. What did you take from that experience?
Yeah, so it has been exciting to watch. And I think for me, just being able to be at the epicenter of what was real estate tech when it started, right? I think real estate tech or prop tech is a thing that really, Deidre, 10 years ago wasn't really a thing. I think you had Airbnb and you had WeWork, but there wasn't necessarily a category for those companies. And so, being at Fifth Wall, you're essentially at the epicenter of this new category. And being there, I just got to learn, what it takes to be able to invest in a lot of these high profile companies and be able to manufacture wins, great businesses like Open Door in VTS, in Hippo Home Insurance, and then be able to take that access and deal flow and more or less turn it into my own vehicle. And try to also do similar types of successes and outcomes.
Well, let's get into that. Why was it important for you personally to make that leap in founding Wilshire Lane Capital?
Yeah, so it's never the right time to start your own firm. But I think for me, I've had the pleasure of being able to work at many best-in-class firms and organizations over the span of my career. First at Morgan Stanley, then at the Carlyle Group. I also spent time at Andreessen Horowitz. They're the ones who first taught me venture capital. And then after that, being able to work at Fifth Wall. And so I think the perfect timing is ultimately when you feel confident in your ability to take a lot of the best things out of those great firms that you worked at, and then also simultaneously have your own true north. There were other theses and other categories that I felt very strongly about that I wanted to pursue. In case in point, ghost kitchens is a category that at Wilshire Lane Capital that we invested heavily into. And that was something that I got to do with my own firm. And, that's one of the first theses that we had coming out the gate is that we invested in ghost kitchens. And this was prior to the pandemic. I didn't know that there was, back in 2019, I didn't know that there'd be a pandemic that would accelerate food delivery by about like 5 years. We were looking at long-term secular trends, and I felt very strongly about this. And being able to run my own firm, I was able to invest heavily in this category. And, we've invested in 3 companies in this space. And already in less than 2 years, we're already up more than 2.5x on these investments. And so I think it's just being able, when you feel ready, you're being able to take the best things that you learn from these great organizations, but also you have high conviction on theses and areas that you want to pursue. That's the right time, I think, to be able to start your own vehicle.
Ghost kitchens is a fascinating topic, especially I think from a real estate perspective, because it takes this idea that you can essentially have a restaurant anywhere because you don't need a front of house. So
exactly.
Really, really big trend. I know Travis Kalanick has been working on this for a while. It's going to be his next big thing after Uber. I think he's still quite secretive about it.
Yeah.
So you've got a relationship with Nile Capital Group. What does that mean for Wilshire Lane Capital?
Yes, the partnership with Nile Capital Group is phenomenal. Obviously, they're backed by Jose Feliciano, and he's the managing partner and co-founder of Clear Lake Capital, which is a massive private equity firm that's out here in Los Angeles. And then so it comes on with, being able to be aligned with him. And then also it's run by Mel Lindsay. Mel Lindsay is someone who used to work at Julius Baer, was involved with helping stand up many different vehicles across different categories, be it, public markets, private markets. And so working with Nile, I basically get infrastructure and support to really help out with a lot of the things that are outside of investing. In running a large fund, there's a lot of things that come with it that are outside of investing from an infrastructure standpoint, from an IT standpoint. And so having Nile really allows me to focus on, what I do best and what I enjoy the most, which is the investing part and all the things outside of investing. They've just been a fantastic support system for us.
Interesting. So when you're thinking about companies right now, are you factoring in impact investing? Is that one of the things that's a part of your criteria?
Yeah, I think it's a huge part of what we do. And I think, people like to think about it, there's 2 types of investing. One type of investing is actually for returns and for profit. And then there's another type, which is impact investing, where I don't care about returns and profit, and I just care about the positivity to society. I don't think that those 2 things have to be mutually exclusive. In fact, on the contrary, I think that one hand can actually help the other here. And so us at Wilshire Lane Capital, I think that's something that's unique about us as a venture firm, is that we track our metrics when it comes to diversity and inclusion in our portfolio. Around 40% of our companies are led by women outright. Around 30% of our companies have Black founders. We track these things, and we view, investing in diversity. We don't do it in lieu of profits. We actually think that having diverse teams, and it's been proven in data, research reports from Harvard Business Review all the way to McKinsey, that having diversity in organizations actually leads to greater outcomes, greater business outcomes. And so when you are deciding to lean in there and invest in more female founders or invest in more teams that are diverse, I think that leads to better outcomes and ultimately leads to better returns. And so for us, it's not one or the other. I think we're focused on maximizing returns. I think you can see that in our results. But obviously, we do have an impact because we're investing in a lot of founders in a lot of groups that I think have been typically ignored or typically overlooked by the technology and venture capital communities.
Yeah, I think that's very true. I love what you said there about that, because I think it's important to look at diversity as just part of it. And diversity is an asset, not something that we have to think of as impacting returns in a negative way. It's like you said, the data shows it's exactly the opposite.
Absolutely. It's not charity, right? Like, we are in the investment business. It's all about maximizing returns. And at Wilshire Lane Capital, we feel strongly that actually having diverse teams will lead to greater returns. And we've seen that borne out so far in our in our results, and we want to continue on that path.
Totally. Well, let's talk about some of your investments because I took a look at, I think some of them are really interesting in terms of some of the trends that we're seeing. One of them is Stuf, which is spelled STU with one F, self-storage startup. I think that's, we've seen self-storage REITs, for example, are up like 49% this year. It's funny how the pandemic, sort of accelerated the need for storage. I keep hearing about the need for storage going up. We just love our stuff too much.
Yeah, I mentioned ghost kitchens as being one of our first theses coming out the gate. Self-storage was probably the second one. And so we have had the pleasure of being able to invest in both Neighbor, which is basically a peer-to-peer marketplace for self-storage, very similar to Airbnb, but instead of people sleeping over or staying over, they get to store their stuff. And then Stuf Storage, which is a company that we were involved in incubating. It's really a fantastic business, and I think is a very key example for how we like to generate value vis-a-vis our real estate partners. And so we basically identified it, especially in the pandemic, that there was a lot of underutilized space in the commercial real estate sector, right? You'd have basement spaces or vacancies in the retail sector, above ground and below ground. And in the office sector, below ground, a lot of parking lots and garages and basements that were not used. And so self-storage is basically a business that will go to a landlord and more or less monetize their dead space or their underutilized space and turn it into these high-powered self-storage facilities, and then using technology, make it an enjoyable experience, right? I think, Deidre, we all have someone who's been in self-storage or used self-storage. No one really is prideful or excited about thinking about their self-storage vendor. Typically, it's an experience that you lament. You're like, I have a self-storage space, and I'm not really excited about it. It's sketchy. Sometimes you feel unsafe. It's pretty sterile. There's no brand identity. And so Stuf is different, right? Especially with, almost half of self-storage customers today being millennials, and then Gen Z is right behind that. I think we felt that having a company where there was a brand and it was tech enabled, that you can have an app and you basically can go up a facility and open up your locker electronically and remotely, and you can know that your stuff is safe and secure. And also that's a great brand that I think millennials can identify with. And a perfect example of this impact investing on the side, Stuf is run by a dynamic female founder, Catherine Lau. She was previously the vice president of real estate at Industrious, which is a very successful company in the prop tech space. And so with Cat at the helm, we feel very strongly about Stuf's profile and going forward. And we think it's going to end up being one of the larger self-storage players, 5 to 10 years from now.
Awesome. So you mentioned Industrious, that's co-working. You're investing in another company I find kind of interesting, Work2, which takes that co-working idea, puts it into restaurants. This one I know got kind of buzzy before the pandemic. What's it doing now, and what's your take on the future of co-working?
Yeah, so this is one of those, water cooler conversations that I think everybody's got an opinion on following the pandemic. It's like, is the office dead or is the office coming back? Like, I'm never going back to the office, or I really need the office. Is it? And I think where we're landing, at least on our perspective, is that's going to be somewhere in the middle, right? I think, particularly when it comes to places where there's, a dearth of talent or high competition for talent, getting folks into the office 5 days of the week will potentially be difficult. Or if you do, you have to give them some level of flexibility where people can manage their families and manage their personal lives. And I think Work2 is just at the center of that thesis. Basically, Work2 tries to bring workspaces or co-working spaces closer to the end user, right? And, I think even if people don't necessarily want to be in the office, many times they don't want to be at home. Right. And so sometimes being at home is not the most productive place. And so with Work2, they basically are taking, once again, similar to Stuf, taking underutilized spaces, but this time restaurants and hotel lobbies, and converting them into spaces that, again, through an app, you can basically book a space, right? So like when you go to a Starbucks to go work, you're basically rolling the dice. Like you hope that you get there and that there's an extra space for you. You're hoping that it's quiet. You're hoping that it's controlled. You're hoping that there's an outlet that's available for you. Work2 really takes that guesswork out of it. And you essentially can book a space for yourself at a restaurant that's, just as nice or nicer than a Starbucks or a hotel lobby, and have a place that you can work at that's, that's not necessarily the office, but it's a controlled and quiet space, just like what you get at home, and much cheaper than paying what you would pay for at a co-working space. Only around like $50 a month. And you have basically unlimited access to all these spaces. And so that's another, and Work 2 once again is ran by two female founders, black female founders, Maisha Burt and Allison McDonald, just fantastic female founders that we're so excited to back.
Awesome. Fantastic. So you mentioned Prologis earlier. We're watching that boom. But how are you feeling about industrial? I mean, we're just seeing prices go up. There's so much demand. Are there any companies in that space that you're looking at?
Yes. So one of our portfolio companies is Saltbox that we're very excited about. And basically Saltbox turns, call it 50,000 square foot warehouses into last mile fulfillment centers for direct to consumer businesses. And so let's say like you and I started a handbag company or we started a sock business. Ordinarily in the first phase of that company, you're shipping stuff out of your own home, or you're getting a self-storage locker and you're stuffing all the stuff in there and you're just going to UPS or FedEx and just shipping it out little by little. And so Saltbox allows you to skip that step rather than having to do it at home or do it at a self-storage facility that's not optimized for that. You actually can book a smaller space, 5,000 square feet, 10,000 square feet, 15,000 square feet, and be able to run a direct-to-consumer business for much cheaper and in a much more efficient way. They also provide all these ancillary services to help you do that. And we feel like that's very on trend for our thesis in e-commerce last mile fulfillment. And, to your point, like, I think we're not even halfway there. I think we're like only just getting started in e-commerce. When you think about, there's so many things that we're now buying online that we used to buy in the store, electronics, books, sometimes furniture. But there's so many things that we're still buying in person, right? When you think about, where people will typically buy toothpaste or toilet paper or perishable goods, they're still going into a Walgreens or a CVS or their local grocery store. And, we believe that a lot more of that process is still going to be taken online. And so there are a lot of companies, Saltbox is one of them, but we're also tracking many others that are going to continue to enable that proliferation of e-commerce consumption, where basically the majority of things that we're going to buy are going to be online. And so we think we're not even at the halfway point yet. And so that's why, real estate companies like Prologis will stand to benefit from this long-term trend.
Yeah, absolutely. So when you're looking at companies, what stage of companies are you looking at? Are you trying to find them before they go to seed or sort of as they grow?
Yeah, so at Wilshire Lane Capital, we really want to focus on being an early stage venture firm, right? And so I think a lot of folks, talk about early stage, but for us, we really define that at being the sweet spot being around the Series A. When a company has had product market fit, they've had some sort of success in real estate at a local level, and they're now looking to expand to multiple buildings or looking to expand to multiple customers or multiple markets. That's where we are very effective in helping them out in that inflection point. We also will look to do a lot of seed stage investments. So Work 2, we invested at the seed stage. Stuf, we invested at the seed stage. So we're also happy to help out companies there. And then from time to time, we also will look to invest in later stage businesses as well when we see that, we see breakout performance and we still see upside. So, we also invested in Common Co-Living and we also invested in BTS. And those were companies that were later than the Series A stage. But we felt that these were just fantastic founders and great businesses and, just really safe places to invest our capital. And so, but our bread and butter is really at the early stage. So you'll be seeing us at the Series A going forward more frequently.
Interesting. So you started learning about venture capital at Andreessen Horowitz, which is sort of like the mothership for learning about that sort of thing. What did you learn about how you deal with startup entrepreneurs, how you mentor them, how you guide them?
I was so lucky. It was such a privilege to be able to start my venture capital career at Andreessen Horowitz. I'm pretty biased. I think that they're, quite likely the best venture capital firm in the world. And I think that's certainly the best place for me to learn. And especially for someone coming from Wall Street, where I was so focused on the numbers and so focused on the financials, working at A16Z really taught me that it's important to focus on the founders and focus on the people. And in particular, when it comes to the earlier stage investment, seed stage, Series A stage, the most important thing in underwriting a company is the founder, is the CEO or the co-founders. That is the most important thing. Is this the type of person, because it's going to be the beginning of a long-term relationship, sometimes 5 to 10 years. And it's like, is this the type of person who is going to be dedicated to the task at hand? Because it's very hard, it's very difficult. And will they stick with it? And when things change, are they the type of person who will be able to, roll with the punches and be able to pivot? Are they an effective communicator? Are they going to be able to recruit talent? Are they going to be able to, keep their investors on board? And so that's really what I learned from Andreessen Horowitz. I was very fortunate. And that's what we bring on to Wilshire Lane Capital today. And as well as understanding that, look, if you can find the great founder, you can build a lot of the other great things around them, right? And so you can help them out with, okay, let's get you to product market fit. Perfect. Okay, now let's help you scale the business. Perfect. Okay, now let's help you get some key customers, and let's help you bring on some real institutional talent. These are all things that you can bolt on. But again, once again, it starts with the founder, and I really think that's the Andreessen Horowitz mantra.
All right, that's fantastic. So as we wrap up, what are you most excited about in real estate for the future, and how do you see Wilshire Lane Capital playing a role?
Well, Deidre, I mean, this is it was great being on with you, and there's just so much. I think with the pandemic occurring, there is so much that's changed in real estate in the past 3 years. People talking about, are people coming back to the office, or they're not coming back to the office? Are malls dead? Are malls going to survive? What about the rest of retail? Multifamily, or where do people want to live? Do people want to live in the countryside, or they want to live in the suburbs, or they still want to live in the city? And so there's just so much movement. And I think that that's exciting for us as technology investors, because typically when there's movement, when there's change, technology, that's a lot of opportunities there for technology to be able to create value and be able to help out with whole new processes, right? And so what previously what previously was like a vacant mall or an empty basement can now be a self-storage facility. What previously was an empty retail center can now be a last mile e-commerce fulfillment center. And what was previously, an empty or an office for one company can now be a flex office space for multiple companies. And so this is what we're looking for at Wilshire Lane Capital, is basically the next generation of companies that are well positioned to take advantage of many of these evolutions that are occurring, and particularly helping out millennials and Gen Z as they are also evolving in how they work and how they live and how they consume. And so it's a super exciting time. We think it's the best time to be invested in this space, and stay tuned. We're excited for the next chapter.
Fantastic. Well, thank you so much for taking the time, Adam. Listeners, you can learn more at wilshireLaneCapital.com. Stay well and stay invested. Thank you.
Thanks so much, Deidre. Appreciate it.